All right, good morning, everyone. Futures Brizio here. It is just before noontime on Friday, October 24th, and I hope everybody's having a great day. As always, make sure you smash that like button, subscribe to the channel. Any questions or comments, leave them down below. So, per usual, we're just going to just take a quick look at where we're at here. And again, for anybody that's new to the channel, I trade certain futures markets based on a combination of a few things. Certainly, price action and market structure are really important to look at. But knowing kind of like the underlying reasons why the market's moving is important too. And in the markets I trade, I'm using commitment of traders, which is, again, I'm not going to rehash all that. If you don't know what that is, you do a little research or go back in my channel a couple of months, you could probably find several videos on COT and also seasonality. Many futures, especially commodities, um, can generally follow seasonal patterns. So, in other words, for certain months of the year, it tends to trade in one direction. Other months of the year, tends to trade in another direction. Then there might be some months in the year where it's very choppy, and so it gives you a little bit of focus when you look at like historical trends about where you may want to consider being long or short a particular market. Of course, there's no guarantee. There could be some event or market forces that blow up a seasonal pattern. But if you look at it historically, and I've reviewed on a couple of other videos some sites you can use to get seasonality data for free. There are some paid sites that get more deeply into analyzing it, but the basic data you don't need to pay for. And so, but as I've also stated, in terms of commitment of traders data, we don't have that updated because the U.S. government shut down. There has been no update in about a month now, so we can't use COT data. So we're basically using 2 out of the 3 of those, being like price action, market structure, and then seasonality. Okay, so that's kind of the basis for how I'm looking at this. And so, with that, we'll just kind of just jump right in and go a quick review here. This should be a pretty short video. And again, if you have any questions or comments on it, please leave it down below. Happy to discuss anything further and also to provide any other information on these topics. And again, you can look back at recent videos I've made, which go into more of this too, especially if you're not familiar with trading with these tools. So, okay, so we'll start with corn, and as you can see, I'm in this long position on corn that I took yesterday, basically off of this pullback area right here that we saw, where we had corn rally come back here, and this is where I got in on a shorter time frame, and we stay in this long. Now you can see today we have corn pulling back very deeply, but as long as this, you can see where my stop loss is down here. As long as this structure is remaining, this is still in an uptrend. Corn does tend to make pretty deep pullbacks if you just look back historically on the chart. When it does pull back, it can pull back pretty deep. And again, for whatever it's worth with a Fibonacci extension, we're at about we're sitting around the 61.8. You can see we spiked through that, but we're essentially sitting at the 61.8 fib level. And so we'll see. And, I'm just going to keep this trade open through the weekend. And, we may not see any recovery of this today just because of the time. The grain markets close pretty early. They close at like 2:30 Eastern time, so that's another 2.5 hours from now. So I don't expect to see a big recovery. In fact, I probably expect things to kind of quiet down the rest of the day, but you never know. So we'll see. But again, as long as we're maintaining this market structure, which is still bullish, and remember the seasonality is bullish on corn all the way through. Corn is right here. We remain, the last COT update was bullish and seasonality is bullish. And if you look over to the right here, corn basically remains bullish essentially through February. Basically August through February, depending what site you use. Could be late January, but irregardless, we're only in October here, so we should maintain a bullish stance on this at least through the end of the year. So that's what I'm going by, and I don't see any reason to change that right now. So I'm going to hold this position, and so that's corn. And we'll get back to the grains here in a second. I want to look at crude oil again. And you can see with crude oil, we had this major swing, which price has now come up. Now, these are Heikin-Ashi candles I'm using, guys, which doesn't show actual true price. But if I just click this candle button here, it does overlay the regular candles. They're the same color as the Heikin-Ashi candles, so it's a little hard to see. But essentially, we did get one candle that closed above here a couple, maybe 8 hours ago. And then we've kind of rejected off there. So here's the question. Is this going to be, a rally all the way back to there? And this is the 4-hour chart. And we're going to start turning lower again. Or are we going to break higher? And so we'll see. If we drop to the 1-hour chart, here's that on the 1-hour chart. Let me turn off the regular candlesticks. So here's the Heikin-Ashi. And you can see we had this little pullback, and now prices come back to this resistance, supply area, liquidity area, whatever you want to call this. I don't care. It doesn't matter. It's come back to here again. So are we going to just bust through here? You can see for the last 1, 2, 3, 4 hours at least, this has made attempts to pop through here, and it has not been able to do so. If we turn on the regular candlesticks, we had this one candle right here. This is a regular candlestick showing right here that did close for momentarily and slightly above the this resistance area, but you can see since then it has not been able to do so. Now, just looking from a geopolitical standpoint, President Trump has been very aggressive in fact, he just came out today and said he expects to see gas prices down to $2 a gallon here in the U.S., which would be, we haven't seen $2 a gallon gas in probably, 10 years. Well, maybe actually when his first term, we got down around there for a little bit. But, if crude oil prices, if the market continues to go up like this, then we're not going to see that because obviously gasoline is a byproduct of crude oil, in the refining process. So if crude oil does continue to rally here, then we're not going to see those lower gas prices. They are pretty low right now. So we'll see. This is obviously a lot is driven by supply and demand in the market. So what's causing this crude oil to rally here? Is it just technical buying because we were down at such low prices that we haven't seen probably since the beginning of the COVID pandemic, when everybody went into panic mode and the prices fell through the floor. These lows down here, at like $55, $56 a barrel down here is very low. So even where it is now at 62 is still below its kind of norm, which is probably more in the upper 60s. So even though, yes, it's made this big run up, we'll see, what happens here. If we're gonna, we go back to the 4-hour chart. But again, if we look at this, these are Heikin-Ashi candles again. These are very strong. You can see on the way up here, these are all very bullish candles. We had essentially no bearish candles on the 4-hour chart until this one, which was part of this little pullback. And there's no wicks on the bottom of these Heikin-Ashi candles, which suggests pretty strong bullish momentum. So we'll see what happens. I have not traded this on this run up because I wanted to see. I looked at this as kind of the major pullback area. We had smaller areas here, here, and here, which it obviously blew right through. But we have this area sitting here, which to me was the bigger of all of these. And so you certainly could have traded this on the way up. So let's see what happens. If we eventually do pop through here and close above these highs, then we're probably going to go higher, at least up to this area, which would be up around $68, which is around our norm. But let's see. And then just in terms of like where is the market break, to me, I mean, we've got basically this area right here, just below these lows. If we can get down and pop back through here, then we probably will continue to go lower again, at least back towards these lows. But this is kind of the range I'm looking at right now from about here. These lows here as being kind of the bottom end of this range, where if prices break through here, I would consider this to be lower and to go lower. And if we get through here, to go higher. Okay. If we look at, I mean, again, we don't have COT data, but if we look at seasonality, the seasonality on crude oil is basically suggesting lower prices from basically the month of October through early December. And then after that, there's basically some uncertainty in the market after that. And so, we'll have to see. So I really would love the COT data, especially, as a way to kind of judge whether this seasonality is on track or whether we're going to do something different. But we don't. So we have to just go by this and just look at the technical price charts. And so, let's see what happens here. But it is at a key level. You can see price is definitely struggling to get through here. Obviously, everybody else, all the other traders see this level too. So there's a lot of people either, again, taking profits at this level if they were long, or they're trying to sell from here. You got breakout traders trying to buy this, probably got some buy stops sitting up here that could be triggered. And we probably have some sell stops, down below here. So let's see what happens. But it's at an interesting crossroad right now based on this area that clearly is other people are watching on the charts. Okay, so that's crude oil. So let's move on to look at currencies. And again, British pound just has continued to sell off. I was leaning on this potentially going higher. But you can see it has not been able to do that. I haven't taken any positions on this. You can see, we did spike through here. But you can see, even if I turn on the regular candlesticks here, it did spike through here, but it came back and closed essentially back at or just below or just above the trend line here and continued down. So that's pretty bearish, for this market. And that's the hourly chart, and the 4-hour chart is here. So again, unless and until we get a break, clearly, taking out some liquidity and some of these zones here, then we're just going to continue to go lower. So this actually kind of might be our zone right now, which actually kind of corresponds with this area here, this previous pullback. So, essentially I'd want to see this British pound break above here. But anything besides that is just a selling opportunity. I haven't traded it, but I'm just kind of watching it. Okay. And so New Zealand, Australian dollar, you can remember I drew this box yesterday, which I need to extend over now because we've had new price action. And again, I was looking at this zone basically from across these highs and the start of this the end of this last bearish pullback right here. And I said basically, as long as we are staying inside or below this box, still bearish. Any break and close above here would suggest a turn to go higher. And you can see we came into that zone, basically the top of the range, and we tried to sell off again. This is the 1-hour chart. And if we turn on the regular candlesticks, again, you can see we made a spike into this and then pull back into the range, and now we're just basically doing nothing again. So I haven't really changed my bias on this. Like, if we get a close above this rectangular box here, then I think that would give the bulls some momentum to go higher. I mean, we are putting in some higher lows here, and I did mention that the other day, that, you can kind of draw a little trend line here, and you can see higher lows here, higher lows, higher lows. So it wouldn't surprise me if we do eventually just bust through this and start going higher. But you can see clearly this range in here is a very, very strong area of selling. And but the fact that we're making higher lows means that, every time it tries to go lower, the bears try to step in. They're not able to really push it back down towards the bottom of the range, or clearly not through it. And they're having less and less effect on their selling. So even though we haven't been able to bust out of this range yet, it is looking a little bit more bullish just because of these higher lows. We're not making higher highs per se. I mean, this high right here is higher than the last couple, but it's certainly not higher than the range here. So, and I'd like to see a candle close firmly above this range, especially on like a medium time frame, like a 1 to 4 hour chart, to see something close above here and then have it start moving higher. So I'm still neutral on this. I'm not saying I'm bearish anymore, just because of the higher lows. But I'm neutral because we are still essentially in a range, although we do have a rising trend line. But we just have not been able to smash through the resistance area and really have the bulls take over. And until then, um, you know, I'm not really looking to trade this, but it could be getting to that point. So here's kind of the latest liquidity zone in terms of, or market structure zone here on the hourly chart. So any break below here would probably push prices back down at least towards the bottom of the range. But if this holds and we can get through this rectangular area and clear all this resistance, then that probably would push prices higher. So keep an eye on it. Nothing's going to happen with this today. It's too late in the session, but next week, we'll keep an eye on it, and just kind of keep the powder dry in the meantime, and wait and see if this is again just some sort of big like accumulation zone that we're eventually gonna pop higher and get through this zone. But like I said, clearly the sellers are not are losing their steam every time they try to push it lower. It's being rejected at a higher and higher price, and that does potentially suggest higher prices. All right, and again on the British pound is almost the opposite. And the COT data on these two was actually the opposite of what they're saying now. The last time I looked at COT data, which again was a month ago, so you have to throw it out the window because a lot could have changed in a month. I mean, the COT could completely switch in a week, let alone a month. But a month ago, it was suggesting bullish price action on the pound and bearish on the Australian dollar. And the Australian dollar did come down quite a bit in that time frame. If we go back to looking at this high back here, this was back right at the end of September, so almost a month ago, and we did come down, but clearly, this is not, a completely different look than, what we had on the way down here. So again, it would be nice to have the COT data because I would suspect that we would see a potential accumulation where, maybe price is now up in that kind of extreme long position, or maybe entering into an extreme long position, and this is like an accumulation zone. But we don't have it, and that's just the way it is. So we have to just use our technicals right now, and seasonality doesn't really apply to currencies, in my opinion. So I don't really look at seasonality for this. So, all right, so keep an eye on Australian dollar in particular. I'm more interested in this one now in terms of whether it's going to break out. The British pound, certainly any pullbacks again towards this trend line. This is a nasty liquidity sweep right here. We're just popped right through here. Anybody with stop loss is sitting like just above this trend line, got taken out on all of this, and then went down. And we did have US CPI data this morning, but so that's probably has something to do with this, although this is the British pounds, not the US dollar. But we did have CPI data out about just under 4 hours ago. So 1, 2, 3, 4. So yeah, that might have been these candles. It might have been a reactionary move, even though this is the pound, and it's not like the British pound US dollar forex pair. This is just British pound futures, and but I would imagine that's probably where this volatility came from. And unfortunately, it probably stopped out a lot of people, or tricked a lot of people into taking longs on a breakout above the trend line. Then price obviously immediately reversed and continued the downtrend. And so that's unfortunately still the case, which is again why I'm looking at this line right here still being the area to beat, for price to come back through here and close above here. If not, then we're still maintaining downward pressure here. So, all right. All right, so go back to the soy complex for the last two. So this is soybean oil, and again, I drew this yesterday thinking maybe we would have a bounce off of this little 15-minute zone right here, and it did try to go up, and it failed. It came basically back down, tried to poke through this zone right here, and kind of rejected. Now it's just moving along on it. If we go to the hourly chart, here it is on the hourly chart. Here's the 4-hour, and the 4-hour again is still putting in. The 4-hour chart is still putting in higher lows, kind of like we see with what were we just looking at with crude oil? No, not crude oil. Oh, the Australian dollar. So yeah, so the soy complex should be going up according to seasonality. Again, we can't say COT data because we don't have any. The last COT report was suggestive of bullish price action. And again, for soybean oil, if we look here, again, we should be looking. Soybean oil tends to not have as great of a runway in terms of these seasonality trends, but basically from early October through mid-November. So we are potentially getting near the peak of soybean oil, but we haven't even seen it really rally. We've just seen, again, higher lows, but not really being able to make higher highs. So it's really been a laggard in the complex. But again, we do have a rising trend line, and here's to me is kind of the liquidity zone here on the hourly chart. And then in terms of if it broke through here for lower prices. So let's see what happens. This is of the three soy products is the one I'm least interested in because it's just really lagging. And even though it is putting in higher lows, it's just really is basically moving sideways. And so I'm just not really very interested in it right now. It's just kind of sloppy and it's not really getting a foothold either way. So you certainly could trade, inside these small ranges, but you can see every time it tries to go higher, it's just being, pushed right back inside the range. So, but at the same time, though, it did try to go lower several hours, saying it couldn't do that either. So it's really, this could just be a big corrective pattern, like an ABC for all you Elliott wave traders, right? ABC, and then we turn and go higher from here. I don't know. But again, we're still operating inside a much larger 4-hour range that is, really having, all these overlapping waves. So I'll watch this one, but it's not really too much of an interest because I'm just not seeing it really trending. It's trying with the higher lows, but it just can't get going with, having a real impulsive trend. So, all right. And then lastly on soybean meal. So here's soybean meal, and this does continue to go higher. See, unlike corn, this did have a little pullback earlier. This was probably actually at the end of the day yesterday. Then we had these three tiny little dot candles here, are basically like the pre-market zone, and we popped higher, and then we're just kind of doing nothing. So this is still long, and this one's been the cleanest. I don't have soybeans even up here right now, but for soybean meal, again, we should be looking at, bullish prices through the month of January. And again, we don't have COT data here. So, and one sec, guys, I got to just take a quick phone call. I apologize. Sorry, guys, very unprofessional, but that was a phone call I had to quickly take. So yeah, soybean meal just continues to rally. We do again have strong seasonal bias on our side here. So this one's really been the cleanest of the soy complex. And again, I don't have soybeans up here, but I don't really want to tie you guys up. But let's just quickly look here and see if I can find soybeans. It's always a joy trying to figure out these. Okay, so let's look at November, the November contract, and we'll just look at soybeans. I've just been, I've been kind of focused just on soybean meal. Um, but I do want to just take a quick look here at soybeans and see where we're at here. So let's make these Heikin-Ashi candles just to make it a little cleaner. And we'll go to the 4-hour chart. And you can see soybeans is a lot like soybean meal. It's just been on a tear since this low back here about 10 days ago. Which again does make sense. I mean, from a seasonality standpoint, soybeans again, again, early October through January. So very similar to soybean meal. So I do expect those to move in tandem. That's why I just decided to pick one versus the other, because honestly, they should be moving together. And so there's no point really trading both because they're probably going to move in the same direction. So yes, you can look at it one way. You can say, well, if you trade both and you have double the opportunity to make money. But at the same time, if you're wrong, you're doubling your risk. So it's definitely a dual-edged sword. And if you do want to, trade more potential, then you just increase your position size or add to a current position, and that's fine. So that's why I just chose to focus on soybean meal. And to be honest, even when you look at the seasonality charts for these two, which I don't have pulled up right now, but if you do, soybean meal tends to be a little cleaner. Soybeans themselves tend to be a little bit more volatile and choppy. So there's nothing wrong with it, but it's just it's good to look at them all as a complex. But you can see that they don't. Soybean meal and soybeans are very closely correlated. Soybean oil tends to kind of do its own thing. And while it can generally move in the same direction, it can definitely be more choppy. So anyways, but clearly, again, you can see soybeans is doing pretty much the same thing, although it hasn't really done much today. It's been kind of, choppy sideways. So we may see, maybe a little bit more of a pullback here. But I do expect to see it continue to go up. Obviously, it's not going to happen today, though. So, all right. So that's where we're at, guys. We're just, again, watching crude oil to see what happens from this critical level. Very, very bullish price action heading up to here. But let's see what happens from here. Australian dollar looking to see if we can break out of this zone, out of this congestion area. And then soybean oil, it's kind of the same thing. Can we break out of this congestion area and have it join the rest of the soy complex, or are we just going to continue to just flop around here inside this 4-hour range, in which case I'm not really looking to trade it. And soybean meal will just continue on. I'm just going to continue to raise my stop loss underneath recent swings just to lock in case it does take a big fall. At least, if I do have to get taken out, I'll at least hold most of my profit in there. So I will move that up probably before the session closes today. So, all right, so that's where we're at. And then corn, I'm hoping, corn is in a pretty deep pullback today, but not unusual. It does tend to have very large, swings and pullbacks. And you just, but as long as the market structure is intact, which it is, and the seasonality is clearly on our side. And as I mentioned, corn of all the grain complex has the clearest seasonality trends of all the grain, whether you're talking soybeans, rice, wheat, corn. They're all corn has the clearest seasonality trends historically. So I'm just going to continue to hold that as long as the structure is holding. All right. All right, guys, so I'll leave it there. Make sure you leave questions or comments below. Smash that like button on the way out. And like I said, any questions or comments, leave them down there. And hope that was helpful. Maybe I'll make a video over the weekend with the wrap. Just so you know, next week, Monday, Tuesday, Wednesday, unlikely I'll be on YouTube. I will be on the road traveling for a few days. Obviously, I will keep an eye on the markets, but I'm not anticipating a lot of opportunity to record any videos. If I do, I'll pop in briefly, probably in the evening with an update, but nothing will be during the day. So, all right. So, anyways, if I don't talk to you, have a great weekend, and we'll see everybody next week. And trade safe. Thanks.